Hey everyone, so in this video I'm going to go through everything that you need to know about home loans, from how much to save for a deposit, how to get a home loan, and the differences between the different types of home loans that you can get. And full disclosure, I did want to mention that towards the end of the video, I will also be bringing up my own personal experience refinancing with 86400. And they aren't sponsoring this video, but they am helping me fund some of the advertising budget that I will be using to get this video to reach a wider audience on YouTube and Facebook. These thoughts are completely my own, and I actually did personally refinance my home loan with 86400, and I would never recommend any product or any brand that I don't personally use myself. So I did want to mention that. So the first step is to work out how much of a deposit that you'll need. And you can do this by having a look at websites like Domain and realestate.com.au to actually start to have a look at all of the different homes available and start to get a gauge of what kind of suburbs and what kind of areas you can actually afford with your budget. Personally, I did save up a 20% deposit with my partner, but there actually have been quite a few laws that have been introduced recently to make it even easier for first home buyers to get onto the property ladder, which I really wish I knew about when I was buying my first home. So I wanted to share these with you. So the first one is the First Home Buyers Deposit Scheme, which was introduced recently in this year's federal budget. And this means that a first home buyer can purchase a home with as little as a 5% deposit and without paying for lender's mortgage insurance. And lender's mortgage insurance is usually a fee that they tack on to the end of your home loan, so you will be paying interest on it for 30 years or 25 years or however long you do have your home loan for. And this lender's mortgage insurance does need to be paid when you do have less than a 20% deposit. But with this new scheme, that is removed completely. There are some conditions for this scheme, including it does have to be a new home that you are buying, and it does also have to be a modest home, so there are some price caps depending on the home that you'd like to buy. And the second thing that I wish I knew about earlier is the First Home Buyer Super Scheme. And this allows you to make extra voluntary contributions to your super fund and then release these voluntary contributions once you do decide to purchase your first home. So the benefits of this is you will be putting pre-tax income into your super fund, and super funds are taxed at only 15%, whereas most of us are taxed at above 30%. So it is very good from a tax perspective. And this is something that I really wish I knew about earlier, because it was around when I was saving for my first home. So those are just some things that you can do your own research into to see if you're eligible or not. And by the way, if you're enjoying this video so far, make sure you give this video a thumbs up and subscribe to this channel if you'd like to see more videos about investing and personal finance. So now let's get into some tips on how to get a home loan. Getting a home loan can be pretty tough lately because the banks are quite strict on who they lend money to. So I did have a few things that really helped me get a home loan from the bank, which I hope you'll find useful as well. So the first thing that I did was I cancelled any credit cards that I didn't actually use and reduced the limits of the credit cards that I was using. And the reason why is because even if you do pay off your credit card each month on time, the banks do see this as a debt, and they do look at the full credit limit. And this is something which is quite unique to Australia. I know that if you are in the US or maybe another country, it might be different depending on what it is like in your country when you are looking for credit. But in Australia, this is something that really helped me get a loan from the bank. The second thing that I did was I tried to reduce my expenses as much as possible. And the reason why is if you are applying for a home loan from the banks will actually start to go through all of your bank accounts and all of your credit card transactions. So it is important to not make any extravagant purchases during this period and to try and reduce your expenses as much as possible. And the final thing that really helped is being a full-time employee. I'm pretty lucky because I am a full-time employee. My partner does have a business, but he is paid as a full-time employee and his equity in the business is less than 25%. So he's not considered really like a business owner in that sense from the banks. But if you are a business owner, this is something that they'll actually look at as well. And they will actually start to analyze all of your profit and loss and your business income and business expenses from the past couple of years and use that as an average. So this can really impact whether or not you can get a loan from the bank. So just something to be mindful of. So the third thing is to figure out how you're going to get your home loan and perhaps even consider going to a mortgage broker. I personally have a mortgage broker and I think that it was really good when I was applying for my first home loan to have a mortgage broker walk me through the whole process of the different types of loans and actually apply for the loans from the bank. And the great thing about mortgage brokers is you don't actually have to pay for them. They are paid for by the banks through a commission that they work with. So it is completely free for you to use their services. It is possible to do it yourself, and if you do it yourself, you may be able to have more flexibility in the types of home loans that you do apply for, because of course mortgage brokers do have maybe some deals with particular banks that they do work for, so they may try to push you into a home loan with a particular bank. I personally did go with a mortgage broker at the beginning when I was applying for my first home loan. And I thought that it was really good because he did find a really good competitive variable interest rate on my home loan. And he really did help with the whole application process when I was applying for my home loan. But I have recently switched my home loan to 86-400, and the reason why is because I currently bank with 86-400 as well, and they do have this really great feature which I didn't have in the home loan that I was with before, which is called an offset account. So an offset account is a transaction account which is linked to your home loan. So this can help you reduce the amount of interest that you pay on your home loan and help you pay it off even sooner. So the more money that you do have in your offset account, the less interest that you'll pay. And they also did have a really good bonus sign-up offer where I got a free $2,000 by refinancing my home loan with 86-400. So another thing to consider when you are looking at different home loans is the interest rate of your home loan. So comparing different interest rates can really reduce the amount of money you pay on the lifetime of your loan, because of course a home loan is a really long loan, sometimes up to 30 years or even more. So you do want to make sure that your interest rate is competitive and is low, so you're not paying any additional interest that you don't really need to be paying. For example, with some of the big four banks, they do have interest rates of 2.69%, and my interest rate is only 2.54% with 86-400. So I will be saving $14,000 on the lifetime of my loan. Something to also consider with 86-400 is they are quite a strict lender, so you might not be able to get approval as easily as you would with some other banks. So that's why it's also important to, I think, talk with a mortgage broker just so that you can work out what's the best home loan for you. So the fifth thing is to compare the different interest rates. For example, a fixed interest rate or a variable interest rate. And basically what a fixed interest rate is when you kind of lock in your interest rate and your mortgage for perhaps 5 years or maybe even more. And a variable rate is basically when you sign up for a mortgage with a bank, and it will have a variable rate which does change depending on the interest rate at the time. So for example, it might be lower some months or it might be higher on some other months. And the pros and cons of these different types of rates is, for fixed rates, these can be really good if you do want to make it easier to budget, because you do know exactly how much will be coming out each month, and you won't get any nasty surprises if they do decide to raise interest rates. But the downside of fixed rates is you can't easily change your mortgage provider. If you do want to change your mortgage provider, you may have to pay a fee if you do want to switch to a different provider. Another pro of fixed rates is sometimes these can be lower than variable rates because the banks do want to lock you in for a longer period of time. So they are happy to offer you some really good deals on your interest rate if you are prepared to fix for a certain amount of time. So the other option is variable rate, and this is personally the option that I chose, but I really don't think that there's any right or wrong answer when it comes to fixed rates or variable rates. There are different pros and cons. So for the variable rate, the pros of this is you can pretty much like pull your money out, go with a different provider whenever you want without paying any cancellation fees. The downside of variable rates is they do go up and down depending on the interest rates at the time, and it can be a little bit unpredictable. But also the good side of this is they could go down and you would pay less on your mortgage, but again, they also could go up, so you could pay more on your mortgage. So those are the two different rates that you can apply for when you are looking at home loans. So the sixth thing is, what is an offset account and is it actually important? So an offset account is a transaction account which is linked to your home loan. So this can help you reduce the amount of interest that you pay on your home loan and help you pay it off even sooner. So the more money that you do have in your offset account, the less interest that you'll pay. So one of the things that I liked about 86400 is I'm already banking with 86400, so I had my mortgage in the same app and I also had my offset account in the same app, so I'm very easily able to transfer money into my offset account. And I didn't have an offset account with the previous home loan provider that I was with. So having this offset account is really good because I get to put all of my emergency funds money there, and I am able to make some really great savings on my interest rate each month. And the seventh point is knowing when to refinance your home loan, if you do want to refinance your home loan at all. So if you do already have a home loan, there are some benefits of refinancing your home loan, including taking advantage of a better interest rate on the market, taking advantage of sign-up offers, for example, the $2,000 that I got paid from 86400, and also offset accounts if you don't already have an offset account. Some things to be mindful of if you are considering refinancing your home loan is there may be some other costs involved. From your existing bank, if you are charged a break fee if you do have a fixed rate, or conveyancing fees to do the paperwork to apply for your new home loan. So that's some things that you need to be mindful of if you are considering refinancing your home loan. And of course, it will take a bit more time refinancing your home loan. So those are the 7 things that you need to know about home loans. I hope you enjoyed this video and found it useful. If you did like this video, make sure you give this video a like and subscribe to this channel if you'd like to see more videos about investing and personal finance. And if you'd like to see some more videos, I've put some links to some videos here, so make sure you click the links and click through to another video.